Marcel Williams here with Elliott Wave Source, number one source for Elliott Wave technical analysis. Today is July 31st, 2013, and today I will cover two key pairs. That's the dollar yen and the euro and the pound kiwi, rather. So let's just start out with the dollar yen. And with this pair, we see that we had been in that corrective phase, had been touching on this for the past couple of weeks now. So we see that it's been stuck in that corrective phase. We had waves A and B completed. B wave retraced 76.4%, landing at this line represented by the 0.26 fib level, which is at 101.398. So it ended at that area, bounced off, and then we looked to get short at a bounce and retest of this descending trend line. So we entered this pair short at 100.4 areas. We were notifying you guys to enter short, and for you guys that took that signal, then you guys took advantage of that move down. But our initial target for the pair was at 97.5. But we think this pair could push a bit lower, so we can extend that to see if we can make some more pips on the pair. Now, as we drop this down, just to get an overall view of where we're expecting this pair to end, and initial targets for this are set at 95.5 and 92. So those are the two initial targets set for this pair, 95.5 and 92. And now as we drop down on the 30-minute charts, just to take a closer look at the C wave, or those impulses, and we see we had waves 1 completed, got wave 2, and then now working on wave 3. So now with wave 1, we're seeing that it was followed by a 76.4% retracement, which gave us wave 2. And then initial targets on that larger cycle for this pair set at 97.5, which we were looking at, and 95.5. So that's what we were initially looking at, but then as we take a closer look at the subwaves for wave 3, we're seeing that we have wave 1 here, followed also by 76.4% retracement. But then we see that wave 3 is actually the extended wave. So it went slightly past 161.8, and then it corrected. And as stated before, wave 2 retraced 76.4%. So with wave 4, we should expect a 23.6% correction, which is what happened. It's slightly past that area, and then now it appears to be going down. So we should expect wave 5 to be the same distance as wave 1. And when we tack that on to the end of wave 4, you see that targets for this pair is set at 96.75. So we can look to make about 75 more pips on this pair. So for you guys that entered the pair and they had the limit set at 97.5, you can look to push that down to 97.8. So we can just take advantage of this and make some more pips on this. And the key resistant area is the key support area, rather, is this ascending trend line. So we're just looking for a break of this ascending trend line, and then this pair should just push lower from that point. So for you guys that are not entered into this pair short, did not catch it when we initially put the signal out, you can look to enter short on a break and retest of this ascending trend line, and then you guys stand to make about 100 pips on the pair. Now let's jump over to the pound kiwi, and this was a pair I touched upon, created a chart for it in the technical analysis area. The reason being is that it's at a key support level at this time, and we're looking for this pair to push up higher, stand to make 500 pips on it. So And let's just take a deeper and closer look. So as we see, it has been stuck in a corrective phase. This pair have been pushing straight up for some time. Just started to correct in mid-June. So we had that ABC to give us that larger A, and then we have this A, B, and then we're looking at that C to give us that larger B wave. So if this price, if it works out to as planned, then we're looking at a 61.8% correction for wave B. It's supposed to correct 61.8% of wave A. So that's what we're looking at initially. So now as we move the fibs down to see the relationship of this B wave, that the subwaves within that B wave, we see that wave A followed by wave B. The wave B corrected 76.4% of wave A and bounced off this ascending trend line, found support there. And now we're just looking for a retest of this ascending trend line, and then we're looking to go long from that point. So now if we apply the distance of that fib level for the entire distance of wave A applied to the end of wave B, we see that 100% move would lie at that 196 level, which is where our targets would be set for this pair. And that 196 level is also that 61.8% correction of this entire A wave. And also we see this descending trend line there. So a lot of signs pointing to why that would be the next move of this pair. So now we're just looking to get along this pair, and then we can take advantage of that ride up. So a good area to get long this pair would be at 190.3. So we're looking at that area to get long, but you can definitely build into this pair because 30 pips should not hold you out to make that 500 pip, take advantage of that 500 pip run up. So you can definitely look to build into this pair. So you can enter at this point and then two more positions. So enter at 1.904 and then 1.903. So just look to build into the position. But for you guys that are not looking to build in, you can just wait to enter at 1.903 or 1.904. And then look to take advantage of this pair going up. Good place to put your stop loss on this pair would be at 189.6. Well, it depends on where you get long also. So you can put a 70 pips stop on this, as you do stand to make 500 pips. And this pair do move very choppy, so you could see a little bit of fluctuations in the pair. So just want to have a wide stop on it, just to avoid the fluctuation, to not get stopped out on a spike or something. So that was the video for today. Thanks for watching. Any questions or comments, definitely feel free to jump in the chat room. Just sign in, jump in the chat room, and fire away. And Paul or myself, we would gladly assist you with any questions that may arise. Once again, thanks for watching, and enjoy the rest of your week trading. Good luck.